So as we think about, let's flip it to the other side. Let's say we have a spouse that works maybe in town. Are there some options for retirement that we can take advantage of there?
Absolutely. So, I mean, for a lot of our family farmer ranchers, there is the spouse that has the off the farm income, and maybe a lot of times that's for the employee benefits. If they need the health insurance or they need the flex care plan. But a lot of times, what they're not thinking of is that spouse may be eligible for a retirement plan at their place of employment. And if they're not taking advantage of it, they may be missing out on that employer contribution. So for a lot of instances, whether they work for a school or a hospital or for another employer, they need to make sure that they're contributing to those qualified retirement plans, because if the employer doesn't match, that's 100% return on their money. I always use the example, even if they're participating in a 401k plan and the employer matches, let's say, up to 3%, and they're not contributing to it, if they just contribute 3%, they're getting 100% return on their money because the employer is matching that 3% that they're putting in. Even if the spouse works for a nonprofit, the nonprofit world has retirement vehicles like the 403b, 457, and other types of qualified retirement plans that they can also make contributions to there on a pre-tax basis if they're looking for the deduction. And that's a lot of times when we're working with our family farmer ranchers. Do you need the deduction? Or do you not need the deduction? Because then we can look at Roth options, whether it's the Roth 401k, the Roth IRA, because you don't get a tax deduction for putting that money in. But all of the growth and all the earnings on that Roth account is going to be income tax free to you later on down the road. So as good as farm families do on managing their taxes and making sure they pay minimal to little to no tax, well, if we can still get money into a Roth account, all that growth, all that earnings is never going to be subject to income tax again, thus creating a better financial independence picture and an easier transition, whether that's 10, 20, 30 years down the road.